Businesses often pay for things in advance. Annual memberships and insurance are common examples. For businesses using the cash basis, this is really straightforward. Simply record the expense as you pay the money. But for those businesses using the accruals basis, you will need to match the expense to the period it relates to. So if you're paying for something that relates to next year, you'll need to record it in next year's profit and loss. In this video, I'll show you two examples of how to deal with upfront payments so you can record them correctly in Xero and account for them in the right accounting period. When you pay for something in advance, it's called a prepayment. This is classed as an asset for your business because your business is owed something in return for the money you've paid. Let's look at our first example. In this one, there's no bill. We've simply made an online payment for business insurance. My business's financial year end is the 31st of December, and it's using the accruals basis. You can check your year end and accounting basis on the financial settings page. Go to Accounting and select Advanced. Then click Financial Settings. Here's the financial year end, and here's the accounting basis. If you don't have access to this page or you're unsure what your accounting basis is, check with your advisor. On the 1st of June, we made a payment of $900 for annual business insurance. The insurance is for the period 1st of June 2024 to 30th of May 2025. So in my financial reports for this year, I need to show 7/12 of the insurance. And in my reports for the next financial year, I need to show 5/12 of the insurance. Let's see how this works in Xero. There's a payment on our bank statement for $900. This is for annual business insurance. For the who, I'll enter AXA. For the why, I'll enter a description. And because this is a payment in advance, I don't want to account for all of this expense in this month's account. So for the what, I'll categorize this as a prepayment. And click OK to reconcile. Let's look at the accounting behind this transaction. $900 has left our bank account, so there's a credit to the bank. And we've recorded a prepayment, so there's a debit to the prepayments account. The balance sheet shows this. There's currently no effect on the profit and loss, but this isn't entirely correct. We need to record the insurance expense in each month it relates to. So let's create a repeating journal. Go to Accounting and select Manual Journals. On this screen, click New Repeating Journal. If you don't have the advisor permission, you can access manual journals from reports, as long as you have the standard user with reports access. Open the journal report and go to Manual Journals. And here you can click New Repeating Journal. We need to record 12 months worth of insurance from June this year to May next year. The day of the first journal is 30th of June. Set this to repeat every month. And the final journal will be the 30th of May next year. I'll choose Post so that Xero will automatically post the journal each month. Enter a narration. When you click into the narration or into the description, Xero gives you the option to insert placeholder. This lets you choose a dynamic field which changes with each journal posted. So June's journal will say Business Insurance for June 2024. July's journal will say Business Insurance for July 2024, and so on. I'll debit insurance. This is the expense each month. The amount is $75. This is the annual charge of $900 divided by 12. The credit side of the journal is prepayments. Remember, we posted the full $900 to prepayments. Each month I want to reduce the amount by $75. So by the end of May 2025, there'll be no insurance prepayment left in the balance sheet. And save. Each month, Xero will post a journal which reduces the prepayment in the balance sheet and records the monthly insurance expense in the profit and loss. And in the year-end reports, the balance sheet will show a prepayment of $375, which is 5 months' worth of insurance that we paid in advance. The profit and loss for this year will show an insurance expense of $525, which is 7 months' worth of insurance we've paid for this year. In this second example, we've received a bill for an annual membership. Let's enter the bill in Xero. As before, I'll categorize this as a prepayment and approve. The balance sheet now shows the prepayment, and accounts payable includes the $600 we owe to the Builders Association. When we pay the bill, simply match the payment to the bill. So here on the bank reconciliation screen, click OK to reconcile. The balance sheet still shows the prepayment, but the accounts payable balance has reduced because we've paid the bill, and the bank balance has fallen as we've paid $600. But currently there's no expense in the profit and loss. So as before, we need to recognize the expense in the P&L. To do that, again, we'll post a repeating journal. Click Accounting and Manual Journals, and then New Repeating Journal. Enter the first journal date, how often you want Xero to post the journal, the end date, and select Post if you want Xero to post these journals automatically. Enter the narration. I'll use one of the dynamic placeholders and create the journal. Here we debit subscriptions and memberships, and again we credit prepayments. And save. So if you're using the accruals basis, use the prepayments account to record any payments you make in advance. Then release the prepayment in the profit and loss over the period it relates to. If you receive a payment in advance from a customer, take a look at this video to learn how to deal with this in Xero. Or check out the full bank reconciliation playlist to learn more about reconciling your bank in Xero. Thanks for watching.